In this video, we're going to compare some of the most popular business development companies and determine which one might be the best for investors looking for current high income. Anyone who likes these higher yielding investments will tell you that BDCs are really a cornerstone kind of investment for those who want high cash flow payments from their investment portfolios. BDCs invest in small and medium-sized non-publicly traded businesses either through issuing them financing or acquiring equity in a company. And then they're legally required to pay out 90% of their earnings to their shareholders in the form of dividends. By doing this, they avoid having to pay taxes, which is obviously pretty appealing, and as a result, we as investors enjoy yields of over 8 to 12% on average. So we'll be looking at a group of BDCs and all of the most important metrics for these companies to determine which one is the best. I'll also give points to each company based upon how they place in each category. So first place will receive 3 points, second place will get 2 points, and third place will get 1 point. I'll also give bonus points where I think a stock might deserve it for having some really outstanding feature. All of this information was gathered from each BDC's latest financial results, which can be found on their websites, or you can use the Edgar database on sec.gov or most stock websites like Yahoo Finance or Seeking Alpha. When it came to picking which companies to include in this video, I selected 8 BDCs based upon their market capitalization and what I believe are some of the most popular within the income investing community. According to stockanalysis.com, there are currently 45 publicly traded BDCs, and so doing the amount of in-depth research we're going to take a look at would have just been too time-intensive for all 45 companies. So with that being said, the BDCs we'll be comparing today will be Blue Owl Capital Corporation, ticker OBDC, FSKKR Capital, ticker FSK, Ares Capital, ticker ARCC, Blackstone Secured Lending Fund, ticker BXSL, Hercules Capital, ticker HTGC, Main Street Capital, MAIN, Capital Southwest, CSWC, and Sixth Street Specialty Lending, ticker TSLX. Most of these BDCs invest in a very similar pattern, which is a wide range of different business types, but right away there are some differences between what strategies a couple of them pursue. For example, Hercules Capital almost exclusively invests in tech and bio companies. Main Street Capital is another unique BDC because they're known for holding a lot more equity investments in their portfolio compared to debt, which makes them different. But besides these two companies, the others engage in very similar practices. So with that being said, let's look at the first category, which is going to be who has the largest portfolio. There's a few reasons why having a bigger portfolio with BDCs is better. First, the larger the portfolio, the more defaults they can afford to have without having their dividend being at risk. Second, it typically means greater diversification within their portfolio. And then third, it's just the sign of a successful BDC. If they're investing in good companies, they'll inevitably get bigger. As of November of 2024, the largest BDC is still Ares Capital with $25.9 billion worth of investments. Coming in a distant second is FSKKR Capital at $13.9 billion, and in third we have Blue Owl Capital Corporation at $13.4 billion. I should mention that Blue Owl Capital is in the process of merging with another BDC, which will go into effect by March of 2025. When that's completed, then OBDC will be the second largest BDC, but for now it's still in third. So in this category, ARCC will get 3 points, FSK will get 2, and OBDC gets 1. Along with looking at the size of their investment portfolios, let's also look at how well they've been able to grow their portfolios. For this, we're going to look at their NAV per share. This represents the total value of a BDC's portfolio, and it's one of the most important metrics when analyzing one of these companies. Every BDC reports this metric every quarter on their balance sheet, where it's referred to as their book value per share. Because BDCs are required to pay out most of their earnings in dividends, it's much harder for these companies to grow. If one of these businesses can report consistent NAV per share growth, then that's great, but many BDCs often report very little movement in this metric, which isn't necessarily bad. For this category, we'll see what each BDC's NAV per share growth has been over the past 3 years. In first place by a huge amount, we have Main Street Capital with 25.85% NAV growth in the last 3 years. As you'll see later though, there are a couple big trade-offs for all this growth. In second place, we have Blackstone Secured Lending Fund at 4.32%, and then we have Ares Capital at 3.99% growth. This is where BDCs, although they can be somewhat compared to ETFs or private equity funds, are different because NAV growth doesn't translate into total return. All of these companies have reported good investment returns, but we'll get into that later. Let's now look at their 3-year dividend growth rates. There are a couple caveats that I need to bring up though. I'm not going to include any special dividends that might have been paid during this period, and only the company's base dividend is going to be looked at. Also, we have been in a high interest rate environment for a couple years, which has resulted in much better than average dividend growth for these companies compared to their long-term norms. That's because BDCs typically hold floating rate loans in which the borrowers have to pay the BDC more when interest rates increase. So some of these companies have had some really high dividend growth rates, but I would not expect them to continue to grow as aggressively as they have in the past few years. In first is Blackstone's BDC with an incredible 45.28% 3-year growth rate. I need to mention that this company has only existed for 3 years, and there was a big increase in their distributions at the beginning, which is likely throwing things off. In second, we have Hercules Capital at 25% growth, and then Blue Owl Capital at 19.35%. None of these BDCs had a dividend cut, and the worst performer was the more conservative Ares Capital. Based on some of the recent earnings calls that I've listened to, their board has chosen to be a lot more conservative with increasing their dividends. In my opinion, they're pursuing a more cautious strategy going forward, and they still have great dividend coverage. But these are the current numbers for each company as of November of 2024. Let's look now at insider ownership. This is the percentage of all outstanding shares that are owned by the board of directors. And a high insider ownership percentage can be a pretty revealing metric on the board's optimism. Usually if the board members own a lot of their own stock using their own money, that's a sign that they're pretty confident that things are going to go well for them. It's not a guarantee that a high insider ownership percentage will mean better performance. Prospect Capital has had one of the highest insider ownership rates in the sector. But that is a one-off kind of situation, and as I've said in previous videos, there could be something devious going on with those board members. So in first place, we have Blackstone again at 8.03%. Again, this is a newer company, so that's likely throwing this number off. In second place, we have Blue Owl Capital at 6.8%, and then Capital Southwest at 4.4%. Most of these are pretty average numbers, but BXSL and OBDC are a bit better than what I typically see. Right now, I also want to give out a bonus point to any stock that pays monthly dividends. That's a pretty appealing feature for income investors, which in this case, only Main Street Capital pays monthly. So I think it's justifiable in giving them an extra bonus point for that. Let's finish by looking at one of the most important metrics, which is their dividend coverage. How well covered is each company's base dividend as of their last quarter? Obviously, the higher the dividend coverage, the better, as it indicates a safer dividend. Coming in first by a wide margin is Main Street Capital at 141% coverage, which is excellent. In second, we have Hercules Capital at 128%, and then in third is Blue Owl at 127% coverage. Overall, most are in pretty good positions, with only FSKKR coming in slightly close. So adding up all the points, this is how everybody did. There's a couple conclusions that we can make from these results. First, most of these companies have done pretty well, and most didn't substantially stand out from another. The most concerning one is FSK for its large decrease in their NAV over the past few years. But surprisingly, they have been able to grow their dividend a bit. It's definitely worth noting that they are in the process of implementing new management, so hopefully that will result in better performance in the future. In my opinion, I definitely think TSLX, CSWC, and HTGC are better choices over FSK, despite these companies tying or even performing worse. Ultimately, if you want a monthly dividend with growth, then Main Street is going to be the way to go, and Ares Capital is a good pick if you're more risk-averse. But with the exception of FSK, I think all of these choices are good. But with that being said, that's going to conclude today's video. If you'd like to connect and also see what's inside my own personal dividend portfolio, then feel free to check me out over on our Patreon, where you'll receive updates and be able to talk to me and other higher yielding dividend and income investors. But with that being said, thank you all so much for watching today's video, and until next time, take care.